Hello and welcome to the weekly outlook. We're going to go through the economic calendar and have a look at what news events we've got next week and see which currency pairs I'm going to be interested in trading. Okay, so the first one that we've got out of real interest next week is going to be the Aussie dollar. We have got some alerts on the pound manufacturing PMI. We've got ISM manufacturing PMI as well on the Monday, but I'm not really focusing on them at the moment. The pound, I did say last week that I would buy the pound at 15000. We have done that, and we'll come back and have a look at that in a minute. But let's first of all look at the Aussie dollar. Now, you know, for the weekly outlook last week that I'd drawn these lines in where I expected the Aussie to go leading up to the 3rd of February, which is when we've got the rate, the RBA rate statement, cash rate and trade balance coming out at 12:30. You can see that it's actually, this was my target for the 3rd of February. It's actually dipped just below that already this week, and you can see it's just started to act as a little bit of resistance at that level. Now, the word out on the markets is that the RBA are going to do a rate cut. Okay, how much of that is actually just speculation? How much of it is truth? Obviously, we won't know until the rate decision comes out. However, what I'm expecting the markets to do is either sell off on the rate cut there down to 7.5, which is the fair price that the RBA have now set for the currency against the US dollar, or if they keep rates on hold, I expect it to rally back up to the 8,000 level, this area here. Now, and then it probably will sell off again. So we've got two ways of trading this. Obviously, we can either wait to see if the rate cut happens. Now, the speculation at the moment, I think it's about 60% of analysts expect there to be a rate cut. There's a 60% probability of there actually being a rate cut. Okay, so if that's the case, if that's how we want to trade it, then I'd look to take sells off of this 7-8 area if it gets back up to there. However, if we believe that rates are going to be kept on hold, then we could take a buy. I think probably the safest way to play it is either to go on the assumption that there's going to be a rate cut and sell it off the 7-8 area. Reason being is if you can do that before the rate cut, then if the market sentiment is that there is going to be a rate cut, then it will start to come down anyway, and it will come down probably enough before the announcement that we'll be able to lock in that entry level and make it a safe trade anyway. Okay, so that would be my initial move if we can get back up to this 7-8 level before the decision is made on the 3rd of February. However, if that's not the case and we are already sort of lagging down here before the 3rd of February and we've not had that chance to have a pullback, I'm not going to be taking trades on new lows or anything like that, because if it does come in that they keep rates the same, then obviously we're going to start to rally quite quickly. So either take the sell before the announcement at 7-8, okay, or hold off until we actually get that information, and then if it's low down here, then we can take, and they keep rates the same, then we can take an immediate buy and catch that rally back up. However, if it's down here and they do make the rate cut and we haven't got into the trade, then unfortunately we're just going to have to wait for it to make its downward move, make the pullback, and then get back in on the pullback there. Don't forget, we've got a target of about 7.5. So if it falls below that, then also we could trade it back up to there as well. But that's the first trade that I'm looking for, and that's going to be on Tuesday morning at 12:30. We have got that data coming out on the pound, got construction PMI as well, and we'll just have a quick look at the pound. Already taken a buy. Did explain last week that I was looking for that trading range on the pound here, and you can see that I've also drawn lines on there as well. It did come up. I was looking for this rally from here up to the 15100 level. Did actually go 100 pips through there, and it rallied up to the next area of resistance, but has fallen back into this area where I expected it to consolidate. Had a buy off the 15000 level last week, and again on Friday I took a buy as it hit that level again. I'll keep buying off of that level at the moment and chasing it up until eventually we get that big rally, or until the CPI data starts to improve. Then each time it reaches back up to that area of resistance, I can sell it off again with the stronger US dollar data that comes out. But it's important that we absorb that information, the construction PMI and the manufacturing PMI that's out next week, just to add it to our arsenal of data for the pound. But what we're really looking for, and what the Bank of England are looking for, is for CPI to creep back up. It's not going to take a lot before they start raising interest rates because they want to keep it controlled. They want to be able to raise rates slowly. They're not going to be able to do that if they leave it too late and CPI suddenly jumps to 1.92%. So I think I would suggest that as soon as it starts to get above 1%, then that's when they're going to start making their very first rate increase. Okay, so keeping an eye on CPI in the future. Okay, so moving on. So we had the Aussie dollar there. Moving through to Wednesday, obviously we've got the non-farm payrolls this week as well. So the data leading up to that, the ADP non-farm employment change, is also going to be important. Not really looking to trade it at that point. And then Aussie dollar on Thursday morning at 12:30, we've got retail sales as well. Hopefully we'll be in that trade and we'll be able to trade that down. It is actually expected to come in slightly better, the retail sales figure. So if we haven't managed to get into that trade from Tuesday, then that could possibly be the point where it pulls back off the good retail sales figure and then we can sell it off again. Okay, moving through to Thursday, we've got the pound again, we've got the MPC rate statement and we've got the official bank rate. Now on this meeting I'm not expecting it to change. It's really the rate statement that we want to listen to see if there's any hawkish comments in there and to see if they are looking to make that rate increase early. So if that's going to happen, then Thursday could be the point where hopefully we can chase this trade back up and keep chasing it up to the top there if they come out with some hawkish comments. Carney was slightly dovish the other day. Mark Carney suggesting about rates being slower than what they were the last time they were mentioning rate hikes back at the beginning of the year last year. But don't forget, inflation was way up at 1.6, 1.9%. So obviously they would have had to have raised interest rates quicker to keep that contained below the 2% level. This time it's a slightly different story. Okay, and then on Friday we've got the RBA monetary policy statement. Again, if they've already made a rate cut, then the things will be in motion there. So it will just be a case of adjusting stop losses or entering on pullbacks if they happen. Now, Canadian dollar on Friday as well, at the same time that we've got the non-farm payroll. So what are we going to be looking to trade on this currency? Then I'm going to be looking to trade those weaker currencies again. So going to be reverting back to the euro, which has been consolidating a little bit this week, and seeing where we are. Not the Canadian dollar, I'm only interested if we get a really big pullback on that. Now the employment change is actually expected to get better. Unemployment rate is actually expected to worsen a little bit there. So really the flag is pointing for this to continue to rally up to the 1.3 area. However, you can see there I've got a 50% retracement on this current upward push. We did have a 50% from the previous spike down there. As you can see, that came down to 50%, which is why I started a fresh Fibonacci here. So I'm looking for that to pull back to the 50%, which is 12369. Quite a way away at the moment. However, that's the optimum price at the moment. It's just way too high. I feel that there's going to be some profit taking coming in on this next week. So if it does pull back to that, then that's the price I can get in, ready for that non-farm payroll, that 12370. If it doesn't, then I'll just leave it alone and I'll just trade some of the other currencies which I've got more confidence in, like the euro coming down, for instance. The euro next week, there's not much data out on the euro during the week, just a few light alerts. So what I'm going to be looking for is to play off that data that we had out last week, that flash CPI, which was worse, the German CPI, which was worse. The only thing that's holding this up at the moment, I believe, is probably the intervention of the SMB trying to weaken the Swiss franc, okay, by buying euros. So hopefully, once they stop doing that, which they're near the price that they feel that the Swiss franc is sustainable, so that could happen quite quickly. And when that does, I think we're going to see this euro fall. If that's coupled with strong non-farm payroll data and unemployment rates and average hourly earnings from the US, then that euro will fall a lot quicker. So going to be looking for sell positions still off that top of that trading range there, around about that 11350, 11360 area, and holding any positions that I'm already in until we start to come down to that 11,000 level again. Still looking for that parity with the US dollar, still looking for €1 to $1, and I think we're probably going to get that within 6 to 9 months. Okay, that's all for this week. They're the currency pairs that I'm looking to trade: Aussie dollar, pound, and euro US dollar. Thanks for watching, and I'll see you next week.